Hi guys, Will here from WB Trading and welcome back. If you are new to the channel, please do hit that subscribe button and tap the bell icon so that you don't miss any of the free content that I share with the trading community here on YouTube. So a trader asked me recently a question that I haven't been asked in a while actually, and that's the following. Will, why do I need a trade record? I've never had one before and I don't really know why I even need one. What do you think? Whenever someone asks me a question like this or similar, whatever it is, I know from experience there's always tons of other people out there who are wondering the same thing, wanting to ask the same thing. So whilst for some of you, you might already be well aware of why a trade record is so important, I have to presume. So as I said to the trader who actually asked me, rather than just answer the question for him, I said, let me just put a YouTube video together and get it answered for anybody else who might be also wondering the same thing, and here we are. So let's dive straight in, and firstly just let me bullet point out the reasons why I feel a trade record is so important, and then we'll dive into each in more detail. And just before we do get started, do you use a trade record or not? Do you think they're important or not? Let me know in the comments section below the video if you would. I'd really like to hear from you all, and I'll try my best to respond to all of your messages too. Again, comment below the video right now, pause the video, take just a second to do that. And yeah, let me know the answers to those two questions if you would. So firstly, having a concise trade record, what it allows you to do is, to begin with, remove what isn't working. And it also allows you to do the opposite and build on what is working. From there, you can also scale what's working by adding risk where appropriate. And on top of those points, you can also really take a deep dive into uncovering additional edge within your own strategy or your own performance. So for example, your best trading days, your best trading times, your best strategies, whether you can adjust risk in a certain area, whether you can reduce risk in another area, and so on and so forth. And finally, you can also gain a full understanding of your performance metrics too. So your win rates, your level of profitability, your average winning run, average losing run. So, you know, with all of those mapped out, you can see just how important and just how useful a trade record can be, can't you? Because without one, these are the things that you're missing. Without a trade record, it's much harder to visually see what's working, where you perform best, where you can add risk, where you might need to scale back risk, your overall performance, your performance statistics, and so on and so forth. So there's a lot to cover here, and there's a lot to discuss. And by the way, just very quickly, if you do enjoy the video today, it'd be great if you take just a quick second to hit that thumbs up button for me, if you would, along with dropping me a comment below the video. That would really help me if that's okay with you, and I really do appreciate you doing that. Anyway, back to the video. So now, before we dive into the above points that we've just covered, what should you even consider recording on a trade record aside from the obvious, right? That might be a question that some of you are asking. So here's a list of things that I record myself and that I suggest that you record too. So the date that you've taken the trade, the market that you've taken the trade on, the strategy that you're using, your position size, your entry price, your entry time, your stop loss price, target price, exit price, risk in a currency amount, risk in a percentage amount, the R that you've actually achieved when you closed out the trade, and the pound amount or the dollar amount that you've achieved as well. Also, you might want to record your ending balance, any entry notes that you thought were relevant when you actually took the trade, and exit notes when you closed out the trade as well, and both maximum favorable excursion and maximum adverse excursion too. And if you don't know what those are, give them a quick Google search. They're not as daunting as they sound. They're really not. They just represent how far a trade moves against you and how far a trade moves in your favor. Now, don't let all of those things that I've just listed overwhelm you. I know it sounds like a hell of a lot of detail and a lot of things to record, but believe me, this data, when compiled long term, will almost definitely help you become a better trader. It really will, for the reasons we mentioned earlier. So let's dive into these reasons, starting with point number one. Remove what isn't working, right? So by building out your trade record, you'll be able to see what isn't working. So for example, you might find that every Thursday, as a random example, you've ever traded across the last year, 2 years plus, you lose money. And on the other side of that, every Monday you've ever traded, you make money. Now again, those are really extreme examples, of course, but that's what I find most useful about trade records, just identifying patterns. Just like you would within a market itself, there are patterns within performance too, and these are only visible via a trade record. So without a trade record, they're just impossible to find. You might also find that, as another example, when you aim for, let's say, 10R, you just never get there. You never get to target. But when you aim for 3R, you almost always get there. So again, this lays out that pattern and it helps you realize, okay, I shouldn't be aiming that high. A smaller target works best, and so on. So dive into things like this using the record that you build and just look at things like what we've just discussed, perhaps also target placement, day of the week, time of the day, maximum favourable and adverse excursion and so on. And yeah, there's always a way to use this data to improve your trading and build on profitability. So point number 2, build on what's working and add risk where appropriate. So let's say that you trade 2 strategies and you find that one is averaging 10R per month, the other is averaging 3R per month. Okay. When you notice this, ask yourself, are you going to risk 1% on each strategy, or might you want to perhaps increase risk to, let's say, 1.25% by the top performing strategy and maybe bring risk down to 0.75% by the lesser performing strategy? Absolutely you would, right? And that should, all else being equal, allow you to actually boost your level of profitability. So these are all they're just little hacks really, aren't they, that again can only be found within trade record data. You might even find that you're getting stopped out too frequently using a 10 pip stop, for example, but if you use a 17 pip stop loss, this keeps you in trades that go on to be wins. And again, you'd only find that data out by looking at adverse excursion metrics, i.e. how far your trades move against you after you've taken them, after execution. Honestly, there really is so much to think about and look at within a trade record. And I just find it fascinating. I really do, how you can just find these little nuances that so many traders completely miss. And the interesting thing is, look, I know that building data, it's not the most exciting thing in the world unless you're like me and you genuinely enjoy it. And the same for trade records and so on and so forth. I know it's a bit of a hassle, it's that extra effort, but you know, it's that extra effort that separates you from all those other traders that aren't willing to put in this effort, to go to these lengths, to really take their trading this seriously. And again, that's what separates the top traders from, well, those that aren't quite at the top just yet. So on to point number 3, uncovering additional edge within your own strategy or your own performance. So for example, your best trading days, best trading times, best strategies. Can you adjust risk in an area? Can you reduce risk in another? And so on and so forth. So this really is a summation of what we just discussed, and it entails, again, looking at what the data is actually telling you. So where do you excel? Where do you fall flat? If your strategy provides 2 entries per day, for example, is there one entry that's more profitable than the other? Or perhaps if you carry that strategy into another market, does that change? Does that flip around? Does it even work best in X market or not whatsoever in A or B markets? That's another thing that you can test using a trade record too. So where else your current strategies perform. We've had clients of ours bring data back to us, actually showing us other areas where our strategies work that we actually had no idea about. Now, I'm not saying test your strategy on every market that exists or you will kill yourself, along with going blind from all the screen time, but you get my point here, I'm sure. There's edge there to be exploited, and your trade record will help you to actually identify that and do just that. Next, and the last point for today, point number 4, gain a full understanding of your performance metrics. So for example, win rate, level of profitability, average winning run, average losing run, and so on and so forth. Now, these are key metrics that we should all know, we should all respect, and they really are the basics, aren't they? So what's your win rate taking into consideration your last, let's say, 3 months or 6 months of trade data? What's your level of profitability in terms of your average win versus your average loss? How long was the longest winning run over the last 6 months, over the last 1 year? How long was the longest losing run? And so on and so forth. These insights and these metrics, they also provide that confidence really, and they allow you to almost know what to expect going forwards. Now, one thing that I would say though is you may struggle with these aspects if you aren't using rule-based strategies, because if you're doing something that's different every day and your process isn't repeatable and it isn't quantifiable and trackable, i.e. you have strict parameters and rules in place, all of this really, it goes out of the window, doesn't it? Because again, you're changing the inputs every time you trade. So as an example, you can't quantify support or resistance because what time frame do you use it on? What market do support levels hold best in? How are you even defining a support level? Is it one new low? Is it 2? Is it 3? Is it 4? All touching each other or not? That's where traders without rules always just fall right down a black hole, because not only do they not truly know if their strategy works, they can't even properly track trade outcomes because every trade is different. And therefore, again, knowing their performance metrics is impossible. Building on their strategies is much, much more difficult, and so on and so forth. But for most of you who follow me here on this channel, I'd hope you'd be using strict mechanical rules by now. And if you are, then great. All of the above will work for you, and you'll be able to use the points I've laid out here to drastically increase your performance and profitability. Also, before I leave you, to add that bit extra value for you all, I've actually added a blank copy of one of my trade records to the description of this video. So nip in there, download that, and that'll save you some time and effort. So call that a helping hand from me to help you get results within your trading that bit faster. And I hope that helps. Anyway, hopefully that's added value for you all. We've covered a lot there, and I'm sending you away with a lot of work to do, but believe me, if you put in this level of effort, you'll get a lot more back out in profits, believe me. Anyway, I'll leave it there for today, and as always, trade with Edge, with consistency, and I look forward to having you back here on the channel soon. Thanks everyone.